term life insurance, the industry term. Most industry insurance companies want to convert you to whole life. There's a conversion clause within those industry term policies, right? Their ultimate goal is to get you to whole life. If they haven't already gotten you in it, that's their ultimate goal. So oftentimes what I've seen is they give you a smaller term and then they want to convert you over. That's what they do. So you got to be able to destroy that industry term. Unaffordable rates increase significantly after the term ends. Understand your term. How long is it? What happens when it ends? Will you need it at the end of the term? Will you be healthy enough to renew it if need be? So all of that is in that term policy in the presentation. Snake Farm, right? You see how the rates go up after that 20 years. It's $1,660, which is $138 every single month for 20 years. That's awesome, right? But after that year 20, you see it goes to $55,000, which is $4,600 a year. So between year 21 and year 30, right, it goes up tremendously to $4,600 a month. And here's the thing. Some people say, well, I won't need it then. Well, can you 100% say, Mr. and Mrs. Klein, that you will not need this policy after 20 years? That came from Ian Pruckner. Can you 100% say you will not need it? No. So wouldn't it make sense to be in a term that you know exactly what happens in the event that you may continue to need it, or you may want to keep it just to transfer wealth and create generational wealth with life insurance and your investments? Wouldn't it make sense to understand and have a policy where you know exactly what happens versus this? Absolutely. Who would say no? Because guess what? If you become uninsurable and you want to keep this, now it's $4,600 a month. That's ridiculous, right? We have the best term insurance in the industry, second to none. Second to none. I've delivered 2 claims to family members, 4 overall, right? Just like Sheila said, yeah, we may be a few dollars pricey, but guess what? You get what you pay for. Y'all know what I'm talking about? Go to McDonald's, then go to Five Guys, right? Go to freaking Denny's, and then go to Cheesecake Factory, right? You get what you pay for. Totally different, right? We do everything. When my mom passed away, T and myself did everything for me and my sisters. I did it because I wanted to know the process, but T did the majority of it. When my uncle passed away, I did everything for my aunt. Everything. She didn't have to pick up the phone not one time. She was able to mourn her husband and take care of that while I make sure that claim was delivered to her, right? When my nephew's coworker passed away, 29 years old, from sickle cell, did everything for Shannon. She didn't have to do anything. Got all the paperwork to Primerica, made all the phone calls, got the claim to her, did everything. She did not one time have to pick up the phone and call the claims department. Yes, we service our clients. That's what we do, right? So when you're doing, when we're winning Top Gun and seeing who can set the most appointments, yes, it's all fun and games, you all, but this is real. This is the real deal. This is what we do. We have the best term insurance in the industry. Bar none, second to none. And you'll know when you deliver a claim. You'll know, especially if it's a family member. You heard what Sheila Bustamante said. She was passionate before, but now 3 weeks, $600,000 to his wife in 3 weeks, and she did all the work for the widow. That's big. That's a big deal. All right, if you were to die today, would you want your family standard of living to be better, the same, or worse? One of the biggest issues with insurance is people don't have enough, right? There's a stat with African Americans, less than 10,000. Less than 10,000. It's like 80% have less than 10,000, some crazy number. They only have enough to bury them, cremation, should I say. Right? So this is the question that we ask. If you were to die today, would you want your family standard of living to be better, the same, or worse? A lot of people say the same. A lot of people say better. Then you have a few idiots that say it doesn't matter, right? I've gotten that before, which is crazy. But we have to break that down exactly what they want and show them. All right, because the biggest thing about the coverage that I had was I did not know how much I needed. I just know I needed something. And that's not necessarily good at all, you all. If you don't know how much you need, how can you get to what you need? There's no way. So you have to understand what has to be covered in the event that you die prematurely. And if you're responsible, you're going to want that coverage. Now, even if you can't afford it at the time, you can work your way to getting how much you need. We couldn't afford the amount that we needed at the time, right? But we knew that number. It's like your FIN, your financial independence number. You know what it is. You may not be able to hit it right now, but you know what you got to do in order to hit it. You have that GPS, that financial GPS. It's the same thing with your insurance. People get overwhelmed. Oh, I need that much. Yeah, that's why this is important, right? Because if something happens to you, you want the little ones to be able to have a better lifestyle, or at least the same, right? Absolutely. Dime, death and final expenses, income protection, education, mortgage, and debt. You got to break that down, right? If something were to happen to you, how much of your income would your family need to continue to come in? They say $3,000. All right, awesome. So you guys know how to calculate how much that is, right? Gabby, you know how to do that? What do you have to do? Unmute yourself and tell everybody what you have to do with the monthly income.
Sorry, there's a fan in the background. In case
you good. You good.
So what we do is we ask them how much their family needs to bring in every month. We multiply that by 12 months in a year. Then we do the 10 times rule, because if they have children, we want it to last the kids to and through college. We then add on $100,000 for schooling per child. We add in debt, and then we add $25,000 for funeral and final expenses.
That's my soloist, y'all. I got my money on Gabby. Great job. Y'all got that written down. Make sure that's important, right? Because what that does is it gets people to thinking, oh man, I only have 100,000. Oh, I only have 200,000. I know for me and T, we wanted our family standard of living to be better. Why not be better? Why not leave generational wealth? Why not leave millions of dollars to our families? People say, I don't want to leave that much money to my family. Well, I do, right? Put it in the will. Let's leave wills, not bills. Put it in the will, break it down what you want them to do with it. Yes, they got to go to college, be responsible, right? There are different things that they can do with the money. So that's important, because what it does is it opens people's mind up. Stop thinking so little, stop thinking lack, because they think they can't. Let's open your mind up. Let's expand, let's vision. When you pass away, right? And you look down, what would you want from what would you want for your family? I want Jada and Ty to have a phenomenal lifestyle, to never have to worry about money. Will they have problems? Absolutely, but money won't be one of them. Money will not be one of them, because you guys know, right? When people lack money and they can't do certain things, it leads to other things like illnesses. That's what happens. It leads to divorce. It leads to people not being able to do the things they need to do for their family. So why not? Why not give that leg up for Ty and Jada when T and Shay are gone, right? So they can take that 1-2 million, turn it into 5-10. Now we've created generational wealth, because guess what? Now we've taught them what to do with their children, and so on and so on and so on. Let's break the chain. Let's change the game. It's over. Let's teach them what to do with the life insurance. Let's buy land. Let's buy real estate, right? Let's invest it. Let's do the right thing so it can continue on and on and on and on and on. That's important, but it starts with life insurance, you all. That is the foundation. It's a huge investment for your family to transfer wealth. I was never educated on insurance being that way. I get excited about that, because this is what happens, right? People think about life insurance, dying. Where we all gonna go? What we getting? Why are we getting so down? We're going to go. We're not gonna live forever, right? This shell is gonna be gone when I go. My spirit will. My spirit will live forever. I'm going eternity, absolutely. When I go to heaven, but this shell is gonna go. So it's not a matter of if, it's when. I get excited about transferring wealth to my generations to come. I don't think about dying. I don't think about that. I think about transferring wealth, and that's what we got to get them to understand. Oh, I don't want to talk about that. Where are you gonna go? You better plan for it. You better plan for it, because you are going to go, right? That's just what it is. We come in and then we got to go. That's what it is, right? So we got to get them to understand that. All right. So you guys got any questions about what we just covered? Let me go in the chat. Not a long one for y'all, but we got to get everybody to understand how important it is to do this. Can you say that chat so I can write it down? What chat? You wanted to say it again? Go ahead.
Okay, so you take your income, and then you multiply that by 12, because they're 12 months in a year. Once you get that result, you multiply that by 10, apply the 10 times rule, because you want the money to last to and through. After you get that result, you're then going to add in 100,000 per child. They don't have children, you don't add it. That's college. So 100,000 per child. Then you want to add their debt. After you add their debt, then you also want to add in an additional 25,000 for death and final expenses. Yeah, did you get that?
So why 100,000 per child? Break that down. You remember why?
Because school is expensive and prices are going up as the years go by.
Right. So for each semester, we say how much? For each, 25,000 a year. So you guys, so Ty got a full scholarship to the University of Maryland, $250,000. Let me say that again, $250,000 that they're investing in my child to go to school. And we're saying 100,000. College is expensive. College is expensive. So that's important. That's important to know that. Any other questions? Anybody else have any questions? So everybody can do it. So if I call on somebody to break that down, you got a question, Gab?
I do have a question.
What's up?
So I think you know, I have a client who told me she had no intention of leaving her daughters anything. All she wanted to do was have enough protection to pay off the house in the event that she died prematurely before she could pay it off. I want to sit back down with her to help her further understand that what she's doing is not the smartest decision.
Right. Do we know how old the kids are? I don't remember.
Yes. So her oldest just turned 19 and her youngest just turned 12.
First and foremost, she got a 12-year-old, so we do have to go revisit that.
Right. She has no, I'll say she has no faith in the oldest because she left the youngest as the beneficiary.
Yeah, because we have to get her to understand, okay, you have a 12-year-old, so we at least have to make sure she's good through college. So that's at least another 10, 15 years of her life outside of paying for the home. That's good. You want the home to be paid for because eventually the home gets paid for. That can be an investment, absolutely. However, we want to do more than just that. You know what I'm saying? So we do have to get her to understand that. And see, the problem with people is these things have been instilled in us for so long. We're just ignorant to the fact, and we don't want to hear anything different. And it's very sad. It really is. Because when you think about it, right, people don't understand from our children having lack, what that creates. Now they're accepting lack financially, and that bleeds into so many other areas. Why not go for the gusto? Why not be the best? Why not have more? Right? We weren't put on this earth to have lack of anything. That's not even normal. That is abnormal. People think lack is normal. So we do have to get her to understand, Mrs. Klein, first and foremost, your youngest is 12 years old. All right. So whatever you provide for her, remember, you're the ATM machine for your 12-year-old. Even when she gets to college, we would have to make sure that we can sustain the same standard of living throughout college. Does that make sense? Right? Because she's going to be in school. We want to make sure that she can focus on her studies and not have to worry about providing for herself. Right? Because it's still our responsibility to make sure that our children get to and through college. Right? That's the biggest mistake in the Black community, because number one, what is it when we turn 18? We got to get out and start helping our family, our mommy and daddy pay the daggone bills. So this is our thought process. Oh, you 18 now, you got to go get a job and help pay the bills. No, you go do what you got to do. Right? So you can provide after college. Right? The best example that I've heard is Shaq. Shaq was able to go back home, save $200,000 by 28. Before he was married, he had $200,000 saved. Think about that, y'all. Men who are married, think about having $200,000 before you get married, not going into a marriage with debt and lack. Think about that. He was taught. Mr. Islam saved $1 million working a job, 40 years. Think about that. So guess what? In return, Shaq comes into financial services. He's learning. After college, he goes back home, gets a job, saves 200,000, stays at home until he gets married, retires his wife. Come on. Yes, Michelle, you got to unmute yourself.
And I was thinking with the situation Gabby was saying, in the legal aspect, couldn't the older sister go back and lock that up and make it harder for the brother to get it because she wasn't left anything?
Nah,
Because I've seen that done here in Georgia.
I don't know how they did that. There must have been a loophole. But if she put the 12-year-old as a beneficiary, the 12-year-old won't get it until she's 18.
Yeah,
My client, yeah, I don't. There was something else going on with that then, because that's not. They're not. I had a client. My nephew's coworker. He had his kids to get half of the policy when they turned 18. Primerica kept it until they were 18, and then gave it to them when they turned 18. So not as a beneficiary. Maybe there was something else that was going on that they got, but they can't touch that money.
Okay.
That 12 is the beneficiary. That's why we want to get a will, right? Okay. Because we want to get someone in the event that does happen that can get that money and put them in so they can take care of that 12-year-old. There must have been something else going on where they were able to do that. I'm not sure how.
Yeah, because it was a situation with my cousin. His mom passed a few years ago, and she left everything to her daughter and nothing to him, and he fought it. So he was able to get something out of it. I don't know the whole scenario of what went down, but that's why I was wondering if that would be the case with that.
It's probably was something else going on with that. Has to be, because they're not legally, they're not able to touch that if it has that minor on there. She can get it when she turns 18. Ian, break down what you're saying. The responsible person conversation, what you mean?
For Gabby, when she was saying about the 12-year-old and 19-year-old, is, there's a conversation we have about, who is another responsible person, outside of your family, who's the godparents. And, a lot of times our community, we call our people godparents, but we don't prepare them for the reality.
That's true.
Over that. What do you say?
Well, that's why I'll get a will. I'm just being honest, because think about it, right? Mr. and Mrs. client passed away. They have $1 million policy. There's no will. The godparents get $1 million policy. Come on. and they don't, they don't have any money, but they get $1 million to take care of Ty and Jada. That's why you want to get a will. So therefore, you've already said you can have the conversation, but it's already in the will. So this is what you got to abide by anyway. This is what's going to happen. You're going to get $7,000 every single month broken down this way for this amount of time. And then when Ty and Jada turn 25, they're going to get a lot. You see what I'm saying? It's already broken down, because godparents get $1 million. I don't care how responsible they are. They're going to buy some stuff for themselves. And I'm not tripping, you can, but how much are you going to do for yourself? You understand what I'm saying? $1 million, that's a lot of money. Who wouldn't? Oh, shoot. Got $1 million check. So I would encourage to do a will. Highly encourage that. Obviously have the responsible person conversation, definitely, but how you concrete that and make sure it's done that way is having a will, especially if it's not the father, the mom, you know what I'm saying? If it's the godparents, aunt, uncle, people like that, mom, dad is different. Husband, wife is different. But when it is someone else, responsible conversation, and obviously the will, making sure they have a will in place. That's important. What else, y'all? Any other questions, Gabrielle? Okay, so you guys know we got the at 11 o'clock, we have the blitz to make sure our week is booked out. You guys know this is New Year's week. People are going to start checking out probably on the 30th. So make sure you have your week booked out. Whatever you do in December is going to mirror your 2021. I promise you, right? Get your goals down. Get ready for 2001. It's coming through 2021. We don't want to go back to 2001. 2021 is coming fast. Get your week set out. Get on the blitz at 11 o'clock. It's only 30 minutes. Set you some appointments. Get your week booked out. And remember, you guys, what we always say, you can get everything on the appointment. You can get referrals. You can get clients. You can get new teammates. We open it up. There are 1 or 3 things that people get when they see this presentation. The first one is excitement. The reason why people get excited is because they start thinking about people who would benefit just from hearing this information. Referrals, value. If there's a need for our products and services and you value what it is that we do, we would love to earn your business. Client, partnership. We are looking for people. If you or you happen to know of anyone that's looking to work from home and earn an additional $1,500 a month, part-time, please introduce them to us. As we go through the presentation, you can jot those names down. We can talk about it afterwards. You can get everything from the appointment. Clients, referrals, and new teammates. Book your weeks out. You got to have at least a minimum of 5 appointments booked. You should already have it booked by today, so you can add more to it when you jump on the blitz and get your week booked out. Eventually, you want to get to 10 plus, y'all. All right, y'all have a God bless weekend. Merry Christmas, Happy New Year, and I will see you guys next week. Bye-bye.